Hi guys, now we'll start with the ninth chapter, which is called Accounts of Companies. As we already told, there are totally 10 chapters. We have two more chapters to cover, chapter number 9 and chapter number 10 for you to complete your company law. If you remember, chapter number 1, which had definitions, there were many definitions which we already discussed. A separate video was given to you for you to see what are the definitions. There itself, we would have covered some basics like what is books of accounts, books and papers, financial statements, etc. So those type of definitions which we are going to again cover here, we will just glance through because we are already thorough with that. So doing the same thing again and again will not serve the purpose. Anyways, we will just touch on it. We can try to be more like visualizing it, and then we can go into it. For the accounts of companies, the first part is this video. So the first part will start from your books of accounts. If you basically see the whole chapter, it starts from section 128 till 138. Starting from books of accounts till internal audit, it will cover everything. From 139 to 148 will cover your audit and auditors. That's your next chapter. So let's go chapter by chapter. Now we are in the part number 1 of your 9th chapter, which is called accounts of companies. What will be there? Types of accounts to be maintained. What is books of accounts? What is books and papers? If you've seen books and papers, books or papers, which includes your books of accounts also, documents, records. We would have already studied this in section number 2. Financial statements, again the 5 heads we need to remember, and it has to be in order. We will cover that also. What is reopening and recasting? Can you reopen the accounts? Are you opening or authorities are opening? So that is 130. If you are trying to open, that means the directors or the people who are involved wanted to voluntarily go for a revision, it is 131. NFRA, one of the most important things for the examination, because from accounting standard, from NACAS, National Advisory Committee on Accounting Standards, now everything is into NFRA for both accounting standards and auditing standards. And section 133 is what is the power of central government to prescribe your accounting standards. That gets connected. Now if you see, financial statements will get connected. 129 will get connected with 132, 133, 134 and 137. So that connection will be there. Anyways, once you finish this chapter, you will know what is that connection all about. Audit report. When you prepare the financial statements, along with financial statements itself, audit report will be combined. And along with that, if you add board report, then it becomes section 134. So financial statement, audit report, notes on accounts. That notes on accounts is automatically forming part of financial statement. So financial statement, audit report, board report, everything that is combined, which becomes your 134. CSR, corporate social responsibility, is 135. What is the exceptions? What is allowed? What is the committee? How much is your net profit, turnover? All these things we need to cover. What is the purpose of CSR? How much has to be contribution for the year? All that we will cover. 136 and 137 is the members. What is the right of members relating to the statements and filing of financial statements with registrar? If you always remember, when you have an exemption to a private company or one-person company, they would have told you should not have default in section 92 annual return and filing of financial statements which register 137. So that 137 is very important for us to know that all these previous time we were concentrating only on 92. Anyways, management and administration, 92, 93, 94 annual return we would have completed. 137 is this that we have already previously connected. We are going to see in depth. Internal auditors, 138. Who can be an internal auditor? What is the limit? All these things has to be covered. So this is your overall bird's view for your particular 9th chapter, which is your accounts of companies. Now for our easy understanding, you have again mark things which are important, so you can easily cover it up and finish. Now we'll go one after another and go inside this and see what is happening. Now, accounts of companies, there is a need for disclosing the annual information to the shareholders by the directors. So that also we are covering it up. Now let's see what is this. There is a need for disclosing the annual information to the shareholders by the directors about what? About the working and financial position of the company. Indirectly, they are talking about the whole affairs of the company has to be understood. How it will start with, how will you know the whole affairs of the company? To prepare something called books of accounts. Books of accounts, books and papers to be connected, and financial statements. Now that's what they are going to cover in section 128. What is 128? Books of accounts to be kept by the company. The company shall prepare three things: books of accounts, books and papers. That means apart from books of accounts, whatever is there. If you always see, we will use a word called stakeholders. Stakeholders includes shareholders. So when we say shareholders and other stakeholders, shareholders, and apart from that, if you have anything, it will get covered exactly the same way. Books and papers will include books of accounts. Because books of accounts is separately given, other books and papers they are trying to cover. So see the high level understanding that they are trying to do. Financial statements, where you will keep all this. So dears, you will keep only in the registered office or any other place in India. You remember the 1/10 of the people who are residing in that particular state. So we told all that in the management and administration. We would have told that really strong. Okay, will it be open for inspection? Yes, it will be open for inspection by directors. How many years? We already told. For all this you will have to preserve it for 8 years. But listen carefully. Listen carefully. If there is any central government involvement, it can be beyond 8 years. If there is any investigation that is happening by the central government, it can also go beyond 8 years. So don't think it is only for 8 years. Why 8 years is a normal provision. But if the central government is there, then the involvement investigation has happened. They will say you will have to prepare more than 8 years also. That means you should have already got it ready. That time you cannot prepare, no. So you should have already got it ready. If you are having a failure in compliance, obviously imprisonment up to 1 year and fine up to 50,000 to 5 lakhs or sometimes both. So this is your books of accounts. The moment when you say books of accounts, books and papers will come, financial statements will come, and 8 years preservation has to be done. Yes. Now see the general requirement. I have marked it very simply. Every company shall prepare books of accounts and relevant books and papers and records and financial statements for every financial year. Each financial year it has to be done. What the books of accounts should have? True and fair view. Very good. How, in what basis they will have to prepare? Accrual basis. What entry? Double entry system of accounting. As simple as that. We made it very strong. Guys, if you remember accrual, fundamental accounting assumptions in your AS1, disclosure of accounting policies, we have GCA, going concern, consistency, and accrual basis. So one of the most important principles of accounting concepts, which involves income and expenses as and when they accrue, it has to be recorded. It is not received and paid. It is only accrual. So based on that, so that it is not direct received or payment, it is only accrual concept. It has to be taken. Double entry, you already know. For every debit, there should be equal and corresponding credit. All that we know. So that's not a big deal. Books of accounts, I already told you. Any receipts, any expenditure, any sales, any purchase, any assets, any liabilities, and items of cost as per section 148. We already covered this in our definitions. So again, you can revise it back. So it is already there in the display. You can revise it back. Books and papers, books or papers, whatever you call it as, it includes books of accounts, deeds, vouchers, writings, documents, minutes, registers, everything either in paper or in electronic form. It can be anything. Where you will place the books of accounts? Registered office. Guys, we are in quite a good speed because we already know all these basics. So we don't need to wait for something to know what it is all about. Our basics are strong. So easily we can do. At the registered office or any other place, the board of directors will decide. See the point here, or such other place where the board of directors may decide. We already told this point. Okay, where such a decision is taken by the board, the company shall within 7 days file it with the registrar. That also we told previously. So accordingly, you can remember. Okay, now can you maintain books of accounts in electronic form? Yes, definitely. Which rule? Rule number 3. When it comes to rule number 3 of companies accounts rules 2014, I wanted you to remember rule 3 of your dividend chapter. Now see what I have given in the comments. Remember, we studied rule 3 for dividend also. You remember inadequacy of profit and all, we covered there only. So 10% it should be there, not less than 15% of whatever it is. Set off the losses and then only consider your dividend declaration payment. All these things we told. So remember, rule 3 will come to accounts also. Rule 3 will come to dividend also. You can go and quickly check back. for your dividend to see what is rule number 3. There also we told rule number 3 is very important. When you keep in electronic mode, what and all the points to be considered? See the keywords alone. It shall remain accessible in India. It should remain complete and unaltered. It should not be altered, and it should be depicted in the originally received from the branches. What you got from the branches, then and there you should keep it. You should not change it. Next, it should be displayed in a legible form. Properly, it should be given. And whatever the books of accounts that is maintained outside India also, see the point here. Whatever that you maintain outside India also, it shall be kept at the servers physically located in India. The server should be physically located in India on a periodical basis. So everything has to be considered, and we need to cover this also. Yes, next one. If there is any service provider details that you will have to intimate to the registrar, what and all you will have to do? Name of the service provider. Guys, in EAS and SM, when we take, we told ISP. Correct, we would have connected this with the digital payments and telecommunication networks. When I was taking UEASM, I would have told about a word called ISP, Internet Service Provider. So what and all details you will have to intimate to the registrar? You will have to intimate to the registrar on an annual basis. What and all? Name of the service provider, internet protocol, IP address we will sell, correct? www.https www.ica.org. You remember all this? When we would have told HTTPS, we would have told Hypertext Transfer Protocol Secure. Whether if it is in green color or the red color strike is there, whether it is fake site or original site, we can do. If it is green color, we will say it is original website. And if it is fake website, a red color strike will be there on HTTP. So you remember, so when we were talking about, we would have told about IP address, internet protocol address, connecting your telecommunication network, transmission control protocol, all that we would have covered. Anyways, I am touching only on the technology because that is also important, right? Location of the service provider, wherever it is applicable, it has to be given. And cloud address, whatever you maintain in cloud. This again, we would have studied in cloud computing, your software development platform, server and storage over the internet. So that cloud, whatever you keep it in cloud, it is going to be, that address also has to be provided by the service provider. See how importantly the technology we are connecting, everything has to be studied as a professional. You should not say that's a different subject. You should know everything about everything. Okay, so this details and all, if you study, then it is going to be perfect for you to keep in electronic form. Yes, now coming to the next one, books of accounts. Where a company has branch office or outside India, it should comply with all the provisions relating to the branch office, and you will ensure it should either be kept at the registrar's office, and from branch office you should have brought the summarized returns. Please understand this. There also it will be there. It will also be brought here, sent by the branch office to the registered office, and that will be open for inspection during business hours. See that also we have marked. So from branch office, it should come to us into the registered office. Inspection by directors. Can you do? Yes. During business hours, it can be by any type of director, nominee, independent director, promoter director, whole-time director. Guys, you can, if you think, we would not have studied anything about directors here because it starts from section 149, which is your CA final syllabus. So don't think why we are not able to remember all that. We have not studied. We are going to study it in the CA final. So put the basics strong. But see the point here very importantly. The person who can inspect the books of accounts and subsidiary, you should be with a board resolution that is to be passed. Then only you will be able to do it. So that's a very important point. Ordinary resolution, special resolution is not there. This is the board resolution. Board of directors resolution should be there. Very important, one more point. The director can seek the information only individually and not through his power of attorney, agent and all. See the point, what we are making it strong is not through his power of attorney, agent or representative. That so only I did not underline it and keep. The director can seek the information only individually and not through his agent or power of attorney or representative where the financial information is maintained outside the country. So we need to be very strong about it, that if it is outside the country, individual basis only it has to be done. Okay, see the next point. period of preservation. I told you not less than 8 years. See the point here, where the investigation has been ordered. What did I tell you? If the central government is taking up investigation, then it will be for a period longer than 8 years. It can be more than 8 years also. So that's what we are connecting now. Yes, person responsible to maintain books. Who will be responsible to maintain books? We will say indirectly KMP, key managerial personnel, managing director, whole-time director, majorly your finance director only. So only in charge of finance director, CFO, chief financial officer, any other person charged by the board. So MD, WTD, CFO, or any other person. If you don't comply with all these provisions, 1 year imprisonment, fine with 50,000 rupees to 5 lakhs, or sometimes it can be both also. So that is the level. Penalty will be there. And ensure your books of accounts should always be not on cash basis. See the point here. This point is example given. It should not be maintained on cash basis. It should be maintained on accrual basis. Every financial year on accrual basis and double entry system only we should maintain. Simple example, so you can remember that. Financial statements, section 2, subsection 40. We already told it should be in order. You remember, guys, when we were talking about the definition, section 2, subsection 40, we were very clear it should be in order. Balance sheet, P&L account or income and expenditure, cash flow, statement of changes of equity if applicable, and any explanatory notes. That is for the previous 4 parts. You should cover your explanatory notes.